Hey everyone, this is Ryan B with Practical Forex Trading. This is your weekly analysis for silver versus the US dollar, so the price of silver. If you want to stay up to date with all of our weekly videos, make sure you click that red subscribe button in the bottom right hand corner of your screen. The date today is March 29th, 2020. And let's go ahead and kick it off. We're looking at the weekly chart, and each one of these red and green candlesticks, trading candlesticks, represents 1 week of price action. All right, so if we zoom out a little bit and we look at the timeline along the bottom, we can see all the way back in 2015, price really fell into this zone of $14 to $18, and it really held true for a number of years, about 45 years, with the occasional pop out, but then price would be sell-off would happen and it would come back down. So we see recently in the last couple of weeks that there was a big sell-off. Price came all the way down to $11.50. But there was enough buying last week and a strong enough candle to propel it back into that $13.80, to $18 range. However, there's a little bit of an overlying trend, multi-year trend, and price is currently below that. The candle closed just below that. So here's my scenario: bullish above, we'll say $13.80 to $14. Bearish with a close below $13.80, meaning this next week coming up, if there's a sell-off and price it closes for the week below $13.80, the bearish scenario will be more significant, and we could see price move all the way down to $8.50 per ounce. However, if price holds above $14, then I think it's just going to stay in this range. Even if it were to go up, I don't think we'd see a cap above $18 because, over the years, multiple times, we see that's been a pretty strong support and resistance. When you think about support and resistance, you think about prior price action, and what once was the floor is now the ceiling, right? So what was support is now resistance in the way back up. We do have, though, price moving well in front of this fast daily or weekly moving average. And whenever that happens, price will want to even itself out. It wants to average itself back out at some point. So that's another scenario for why price would continue up. And really, it would make sense if price would come back in this range, just because it has historically. However, if price closes below $13.80 or lower this next week, then look for prices in the $8 an ounce. And even below that, we have $4 an ounce if the 8 to 8.50 line were to not hold. Let's go ahead and look at our daily okay, this is tells a great story. Now this is pretty positive. This is a very bullish V-type formation, and trend lines are subjective. So if we were to say, well, really, I think the trend, hey, it's above this line. That's what matters more than this trend line. Just from that objective square grid training view, price is above that, and then we'd see price continue back into this range up to $18. But there's a good chance we're not going to see price escape from the $18 range for a couple of years, even if it were to hold above 14. So when that happens, there's less money to be made, right? Unless you're going to be holding for the long haul. So long haul, we see silver, as long as it could hang in this range, is pretty good. If we do see, though, price come back down to $8, might make a great buying opportunity. It hasn't been that low since, the crash of 2008. So that might be the next biggest buying opportunity since then. But we're going to want to pay attention to what happens in the next couple of weeks. We also now have a confirmed bearish descending triangle in the pattern. So when you think about that, it really enhances the bearish scenario and says, well, if price can't hold above this, or exceed $18, it might just continue down over the next couple of years to become less and less valuable. Okay, well, hope you all have a safe week and make a lot of profits. Take care.